Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FXPesa. So today we'll be talking about the top market events that are currently moving various asset classes. And once we understand who they are, then we'll do some technical analysis to try and understand the prevailing market patterns. And hopefully from there, everyone will be able to trade from an informed perspective. So, sorry for that. So, for those who are new, you should know that the Market Snapshot series is a daily session that happens exactly at 11 a.m. from Monday to Friday, where we cover different markets ranging from Forex. We look at commodities such as gold and oil. We look at top US and European equity market indices. And at the same time, we look at other asset classes such as Bitcoin, trying to understand what is the top event for the day, where is more volume headed, and what are the expectations. So, as usual, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So let's get started with the economic calendar. So as you can see on the economic calendar, Tuesday seems to be quite a busy day. So we'll be expecting quite a number of things. One, we should be looking at the current account from the Eurozone, which is basically the difference between exports and imports. So we'll be looking to see the performance of the Eurozone over the last 1 month, trying to understand whether the European economy is exporting more or importing less. Then at 1 p.m., we'll be looking at the inflation report from the Eurozone. So the final CPI is usually very close to the flash CPI. So that's why it's highlighted as low impact news, because the flash is usually a very strong indicator of the final. So we don't expect any surprises. So in the previous reading, it was 2.7% in the flash. So we expect the same. And also for the final CPI, we're expecting 2%. So if you look at the progress of final CPI over the previous months, then you'd notice that since hitting this high, which was about 10.3%, inflation has largely been declining in the Eurozone, with the most recent report indicating that inflation was at 1.7%. So in this case, we are looking at a slight uptick in inflation from 1.7% to 2%, though it's still within the ECB target of 2.0%. So as for the core CPI, we are looking at 2.7%. But then if you look at the highs that we saw as at April 2023, we saw around 5.7%. Since then, the overall direction has been downwards. We have seen inflation significantly drop. And as per the previous reading, we saw 2.7%. So we don't expect much of a change for the month of October. So with the ECB basically achieving its inflation target, then there is that expectation that we should be looking at the European Central Bank looking to continue with the rate cuts, and that should be negative for the euro. So this may be the base for a continued bearish momentum on Euro USD. So later on in the afternoon at 4:30 p.m., we'll be looking at CPI data for Canadian inflation. So I'm trying to check that. Just give me a second. So for Canadian inflation data, I prefer using the trading economics calendar, which tends to give much more detailed information, mainly the inflation rate year over year. So as per the previous number, it was 1.6%, way below the target of 2%. So if you look at the progression of year-over-year inflation, you'll notice that this number has been going down. So the highest level we saw was 8.1% in June 2022, And since then, there has been an overall progress where inflation has significantly reduced, with the most recent report indicating an inflation report of 1.6%. So, of course, with the expectation today, where in this case we're expecting an uptick to 1.9%, this basically indicates that inflation may be resurging in the Canadian economy, but it's still within limits. So the central bank may continue easing policy, or basically reducing interest rates. So core inflation rate year over year has also been having quite a decline. So over the last 3 years, you also notice the same case where we saw a high of around 6.2%. Then we saw a low of 1.5% before the most recent reading, where we saw 1.6%. So in this case, we have, let me just share this. So we saw a high of 6.2%. We went all the way down, saw a low of 1.5% in August. Then in September, 1.6%. So from 1.5 to 1.6% was a slight uptick. Of course, we will be expecting to see more progress on the same. So as per the expectation today, for core inflation rate year over year, we expect it to remain at around 1.6%. So on the month, we had a previous drop of negative 0.1%, and we're expecting a further drop in prices of negative 0.4% for the month of October. So that will be a key determinant on the direction that the Canadian dollar pairs will be taking. Of course, a further drop in inflation is expected to lead to a much weaker Canadian dollar, whereas an increase in inflation, let's say a bigger than expected increase, would lead to the Canadian dollar pairs continuing to strengthen in the market. So looking at the FinViz website, and in this case, we'll be trying to understand the performance of the pair. The Canadian dollar has been pretty strong relative to the dollar. I think among the major pairs, it has had the minimal losses, down 1.54%. And this is within the period of the last 1 month. So over the period of the last 1 week, Canadian dollar is up 0.51% against the dollar. And for the last 1 day, the Canadian dollar is up 0.02% against the US dollar. So looking at the daily stats, it seems like the Japanese yen is the strongest currency in the market today, whereas the euro is the weakest currency in the market today. This means that if you're looking to take a position in the Canadian dollar, if it's a buy trade, you're trying to buy the CAD, you want to buy it against a weaker currency. So Euro CAD might be your target currency to be trading this afternoon. And if the Canadian dollar happens to be weak, you want to pair that with a strong currency, and the Japanese yen seems to be the candidate for today. So CAD JPY might be the currency you might be focused on if the Canadian dollar happens to be weak, and Euro CAD if the Canadian dollar happens to be the strong currency in the markets today. So just realized I wasn't sharing that, so just brought you back to this. So JPY is the strongest currency today, the euro is the weakest, and for the week, the Canadian dollar has been up against the dollar 0.51%, meaning that it has been relatively strong. So if the news strengthens the Canadian dollar, you want to pair it with a weak currency, and the weak currency for the day or for today seems to be the euro. On the other hand, you can pair it with a JPY in case the Canadian dollar weakens. So that being said, back to the economic calendar, we don't have much happening after that. We'll be looking at US building permits, medium impact news, as well as housing starts towards the afternoon as we enter into the second day of the G20 meetings. So tomorrow, very early in the morning, we'll be looking at the interest rate decision by the People's Bank of China. This will be at 4 a.m. We don't expect much of a change in interest rates. And then at 10 a.m., we'll get the CPI from the UK, where inflation is expected to have an uptick from 1.7% all the way up to 2.2%. So if we happen to see this or even a higher number on CPI in the UK, then the overall expectation is to see the pound strengthening after the report. So beyond 10 a.m., of course, at 11 a.m., we'll have already seen the next market snapshot episode. So that being said, I believe we can jump straight into some technical analysis and try to understand where the markets might be headed next. So I'm looking at the comment section. Hello to Upscale. Thank you for joining. Gary Patrick, Gerard Kimani. Thank you guys for joining. Irene Karaoke, Violet. Thank you for joining and good morning. Hello, Jason. Can see Kevin Kiplimo and Ayuha Siddiq. So there's a question here. Which website do you use to read the news apart from Forex Factory? I think I've shown you a couple. I've shown you already the FinViz website that you're already seeing. So FinViz is a good data aggregator. Sometimes if you want to know all the news happening in the markets, you might get lucky by clicking on news here, and you'll see an update of all news coming in the markets from different websites, as well as blog articles coming from different blogs. So they keep updating every now and then. So you're able to see all the top news happening in the markets. So that being said, let's jump straight into some technical analysis, try to understand where the markets might be headed next. So as you can see, so far since yesterday, we have seen the Canadian dollar regaining some good ground against the US dollar. So from the daily time frame, you can see that we were having several areas that were acting as resistance, and this was our previous highs that the market had formed, and eventually the USD CAD pair managed to break all of them. So in this case, we were seeing the market just pushing higher and higher, and after breaking the topmost resistance, zoom out and you'll see it. So this was the highest price action level all the way since 27th of May 2020. So here we have seen the dollar being really strong against the Canadian dollar, breaking a major resistance level. But then after breaking, notice that the market rallied for 2 more days before making a strong reversal yesterday. And today we are seeing the same thing continuing. So from the 1-hour chart, you can see the big sell-off yesterday. And today we are expecting this extension where the market continues to drop and eventually gets to 1.39755 before making the next big move. So ahead of this afternoon's news, I expect to see the market continuing to drop and eventually getting to 1.39755. And it's already evident that from yesterday's price action, a big sell-off, in the evening towards midnight, we had this sideways momentum. And in the sideways momentum, you can easily notice that the market was basically ranging around here. And from there, from the lower side, you can see the range was continuing. So these might as well be the best trade for the day as we look at the market continuing the bearish momentum. And we have a breakout. It has already formed. So at the close of the next 15 minutes candlestick, we should be looking at the extension to 1.39755. So that's the case for USD CAD. Of course, I expect that the market will be already here before the news in the afternoon. Then from there, we'll see what happens with the outcome. Of course, as we have mentioned, a strong CPI inflation report or higher than expected should be positive for the CAD, lower than expected should be negative for the CAD. However, it's much more likely that the market may have hit a top and could be continuing further downwards. So that being said, let's look at some other pairs. Of course, we did our analysis on gold yesterday. So we expected that the market would rally from this point and eventually get to this previous resistance area around 26.16. So since we got close to this area, the market slowed down and this morning eventually broke the level. So after breaking above this area, notice that the market has pulled back in what looks like a retest. and the bullish momentum seems to be pretty strong, and we could be seeing a continuation of the same. And as we had mentioned yesterday, we could be seeing an extension of this bullish momentum going to 2650. So gold is pretty bullish right now as we see the dollar index taking some step backwards. So we had this consolidation on the dollar index, and then we mentioned that we are expecting a breakout towards the lower side with a target of 106.005. So this played out as expected, but not immediately. First, the market moved higher towards the upper trend line, and then eventually dropped all the way down before bouncing a bit. Then the overall price action is now indicating that the dollar index, it might be on a reversal here. In this case, erasing some of the gains we have seen over the past couple of weeks. Notice how we had quite a strong momentum, and now we're entering some form of correction where the market is taking some steps backwards. So also in silver, we saw the market breaking the upper trend line. So here, after the strong bearish momentum, we had a break, a pullback, and then yesterday, the market bounced pretty strongly, made a very good rally, and now we are seeing a potential continuation of the same. So we should be looking at the next potential resistance area, somewhere around 32.059 as the next target for silver bulls. So while the market may struggle to continue with the bullish momentum, it's still indicating that buyers have already come in, and we are seeing some form of reversal, and we could be seeing some form of inverted head and shoulder here, which is likely a reversal pattern indicating that the market might now be headed higher. So notice the coincidence of these highs and how the market made the first shoulder, the head, and the second shoulder. Then upon breaking yesterday, we could be seeing a continuation of the bullish momentum. So still on the commodities side, we have Brent oil, which we analyzed yesterday, and we mentioned that this was a key level support. So notice how many times the market has been bouncing from that area. So we noticed that last week's low was retested at market open yesterday, and after retesting here, the market struggled a bit, but eventually made the strong rally. Our targets were not that far off, so our target was just right here at $72.322 per barrel. However, the market exceeded expectations, continued moving higher, and now we have a trend line here to work with. So this basically shows us that the price of oil is still in consolidation. Though we are seeing higher highs, the lows seems to be equal, and upon getting to the previous high, there is a likelihood that we get to see some form of pullback, and the pullback could go back to the previous target that we had around 72.322 before the market continues with the bullish momentum. Remember, the idea is to still see a recovery. So from the forward chart, notice how we had a double bottom here, or even triple, and there's still a level that we need to retest. Sorry for that. Try and go for a horizontal line. So the level is somewhere around 75.9 or even $76 per barrel. So the market has hit it twice in the last 5 weeks. Now, as we bounce from the lower trend line, we could be seeing an extension of this bullish momentum towards the $76 price level. So another key level commodity is Bitcoin. I say commodity because it's a digital commodity. So clearly, you can see that the market is squeezing some air, trying to push even higher. So what we are witnessing with Bitcoin is pretty easy to understand. So if I was to remove everything from my chart, zoom in, then you can see that we are having this kind of trend line acting as support. So every time the market has gotten close or at this trend line, and this is within the last 10 days or so, we have seen the market bouncing strongly and moving higher. But then if you look at the highs that you have been experiencing over the past couple of days, they seem to be following this path, which means that we are still in a bullish momentum, but the momentum is not that strong. So In this case, the overall direction in Bitcoin is basically following this path. So with this in mind, then it makes more sense to be buying the dips and selling the tops. Then if you're on the long term, no need to sell the top. It's still a very strong bullish momentum. So we are potentially looking at Bitcoin making these kind of movements like yesterday, where there was a big sell-off and then a rally, a big sell-off and then a rally. So identifying opportunities along this line might be the way to go. So if you happen to see another pullback today, then the idea is to be going for bullish positions. So in the direction of the trend, we continue seeing something like this likely happening in the afternoon. So on the US equity indices, we have the US 500, which we mentioned that it was looking to bounce after retesting the previous high. Key level resistance area, but now turned into a support area. So notice how the market bounced off this area on Friday. Then yesterday there was a slight pullback, but then eventually the market ended up pumping higher, which means that it's likely that the bottom is in and we might see some good bullish momentum further in the day. Of course, don't have a lot of news in the markets today, so perhaps just a slight extension of the bullish momentum to around this area here. So I don't expect much activity in SP 500, but we could be seeing 59.22. So for the Russell 2000, it's still struggling to bounce from this area here. So from the 1 hour chart, what we are seeing, or even from the 15 minutes chart, it's a market that is now following this particular path here. So it's still in some form of consolidation. I wouldn't say this is the absolute best trend line. Perhaps something in the lines of this. So in this case, we should be looking for some potential break, some potential bullish momentum. So if we see some potential bullish momentum, we know that it's now breaking out of the consolidation, and perhaps it's time for a rally. So for the Dow Jones, it was a similar thing. We are currently looking at a market that is really trying to make this comeback. So after attempting to go down several times yesterday, eventually failed. And today, this morning, we got back to our neckline here. And now the market is still retesting the same area. So of course, it's a sideways momentum kind of market. So we wait for the eventual break, most likely towards the upper side, looking for a bullish trade. So for the Nasdaq, we had the big sell-off on Friday. Market started recovering yesterday and kept going up until it goes here. Then today, there seems to be quite some silence or low volumes. But then at some point, we still expect the market to continue with recovery. Of course, we have this previous high, which will likely be our target for the day. So in this case, we expect the market to complete the journey today and at least touch the 20,650 price target level. So as for Asian indices, this is the Nikkei 225 index. So clearly in a very strong bearish momentum. So this is the path it's following on the 1 hour chart. So if you zoom in, you notice how the market has found resistance on the same trend line 3 times. Then after hitting that resistance, we have seen the market continuing to push lower. So in this case, an obvious target is the previous low, which means that we are likely to see the market extending this bearish momentum further downwards to that 7,760. So for other indices, in this case, including European indices, our speculation wasn't that perfect yesterday because we didn't have much momentum. So what we saw yesterday was the market really struggling to move down, move up. So it was more of a sideways market. Notice how after the open, there was a big rally, then a drop, a rally, and now it seems like the market is entering some form of consolidation rather than making an impactful move. So this seems to be the limit. upon which the market is consolidating. So we observe the potential breakout, and this is for the Spanish IBEX. So the Euro 50 cash index, this one is showing some form of promise, having seen this strong trend line on the 1 hour time frame. And after the market found that resistance, notice how sellers are already coming in, indicating that the European stock market index might be headed lower. Of course, we have targets all the way down. So if this plays out as expected, then we continue to see this bearish momentum. And for the French 40 stock market index, it's a similar thing that the market seems to be in a consolidation mode. So we are seeing this area acting as the resistance. And of course, we are also seeing some form of support around here. So though it's not that far-fetched, the idea is that the market has rejected higher prices. And now we are seeing a strong push towards the downside. So clearly an expectation that the market goes for the previous lows. So on the currency side, we have already covered USD CAD. So we'll be covering other currencies. Of course, we have Euro USD, which we speculated would be headed higher towards the upper trend line here. So this is something we identified yesterday. And today we are seeing the dollar index being quite stubborn, attempting to move higher. But now we are seeing it erasing some of the gains, which means that we are likely to continue with yesterday's trend, where the dollar index was pretty weak, and we saw the euro making a recovery against the dollar. So, of course, a retest of 1.06, 116 might be playing out. And for the pound USD, we had a breakout of from this trend line here, indicating that the market was quite bullish. But now, since we got to that area, we haven't seen much of a progress. So perhaps we'll be seeing some more price action activity later in the afternoon. But for now, it's more of a consolidation. So it doesn't seem at all as if this market is making further progress since the price action yesterday. So we should be waiting for a potential break out of this consolidation. So pound yen, as I mentioned, is the strongest currency in the market today. So here we didn't quite get to our target, but we got pretty close. But now it's a clear, obvious sell. So we expect the momentum to continue as the yen strengthens in the market, with targets around here, around 193.854. So yen being one of the most volatile currencies, we should be looking at a very easy shorts on pound yen. You can already see the volume is there, and this is just the London Open. So pound yen seems like a good short. Same thing as USD yen. So we expected some further bullish momentum yesterday. So while we were doing the market snapshot yesterday, we expected a strong momentum in USD yen. So of course, there was some good rally, but the market didn't extend all the way. So that is invalidated. And now we are looking at the exact opposite, where the market is now headed all the way down to around 153.087. So we expect to see some further downside momentum on the USD yen. And perhaps this could be our trades of the day, having seen the strong bearish momentum. So AUD USD continues to struggle higher. So as we identified yesterday, that the market would potentially bounce from this area. So we saw the market potentially going down and bouncing from here. So the bounce was quite strong, broke the upper trend line, went all the way up. And now we remember a period of time and the market was ranging here. So now we're expecting the market to continue extending this rally and potentially get to 0.65392. So dollar against the Swiss franc, we saw the dollar erasing some gains, eventually making a breakout, retest continuation. And now after the early morning momentum, where we didn't have much happening, it seems like volume is coming back to this chart. And that volume can be observed from what we saw since the day started. So if we were to say this is the overall trend line and the market was following this path, then it's just about to change and the market is potentially looking to make a breakout here. So that hasn't happened yet. So it's a wait and see kind of scenario. And if it happens to break on the lower side, then we go for short selling positions. So New Zealand USD, we are seeing a strong bullish momentum on the New Zealand dollar against the US dollar. But then since morning, we haven't had much of an activity. So if this is the overall path and this other one is the overall path, then we can say the market is in a triangle or in a consolidation. So we wait for the eventual breakout out of this triangle, most likely with a bullish bias. So for USD CAD, we already analyzed this. So we were expecting a break. It seems like the break is no longer playing out. So we keep adjusting our trend line. So in this case, to this area here, to accommodate that, and then we see if we'll have a breakout in either direction. So for now, it seems like most currency pairs are just consolidating, with the exemption of the JPY pairs, where the JPY is currently really strengthening, and we don't know whether the Bank of Japan is doing as it had promised. Remember, they are promised to support the currency, and if that's what they are doing right now, then this might be it. This might be your moment to enjoy some Bank of Japan intervention. So this is it. Pound yen, USD, and this seems like the most likely assets to be getting some good volatility and potential rewards if you are trading in the markets right now. So there's a good question here from Jeff Mora as we approach the end. When you say Feds are going to cut their rates, what does it mean? So it basically means that the Federal Reserve Bank of the US has been looking to cut interest rates in order to stimulate the economy. Remember, when interest rates are high, the cost of borrowing goes higher, and at the same time, people are disincentivized to borrow from the banks. And remember, if people don't have money, they don't spend, and companies don't make money, so the economy tends to slow down. So when the Fed cuts rates, capital becomes cheap, people get more money in their pockets, they buy more stuff, companies sell more stuff, and when demand increases, companies expand production, they hire more people, and this leads to increased economic growth. So a good question from Mungari Patrick. Can we say authoritatively that gold is back to the bullish momentum that is sustainable for a considerable time to make a full recovery on the sale of their ores? No, I am not very confident in gold making a full recovery, mainly because one of the key drivers of the gold rally yesterday was the potential acceleration of the geopolitical risk between Russia and Ukraine, where Biden had authorized that Ukraine can now send long-range missiles to Russia. So further escalation would mean gold continuing to recover, but it's a very tricky endeavor. So I wouldn't be betting on that at all. So perhaps even better is to be looking at short selling positions in USD and for the day, or even in pound yen. So notice this is not the 1 minute chart. This is the 1 hour chart, and it's moving like this. If you look at the 1 minute chart, this is a very strong acceleration. And this basically implies that the Bank of Japan is most likely intervening in the currency market, trying to support their currency. And that's why we are seeing this bearish momentum. So good morning, Jacqueline Gitumbi. So All Sports TV, BOJ has increased possibilities of intervention. Are we in it already? JPY is bulldozing at the moment. Yes, it's most likely an intervention. We don't see this much volatility on a Tuesday morning without any major news in the market. So it's more or most likely an intervention. Remember, we are on the verge of the close of the Tokyo session. So here, basically, is likely that the Bank of Japan is intervening. So that's it for the day. Thank you very much, guys. If you're watching this on X, remember to share and like the video. And if you are watching this on YouTube, like and subscribe. Thank you for your time, and I hope to see you tomorrow. So if you're just starting your trading journey, remember to register for a trading account using the links in the description below. And if you're just learning how to trade, check out the Novice to Pro series, which is available on the FX Pesa YouTube. And at the same time, we have an event coming up this Friday in Nakuru. So if you're a trader and you're in Nakuru, then make sure to prepare, register using the links on our social media handles, and we'll be looking to have a really good masterclass.